Hello and welcome to your weekly investor check-in. This month we have Pacome from the investment team answering the questions, and as last month we're recording this virtually because of the coronavirus. So Pacome, has the stock market rebound that started in April continued so far in May?
Well, the market extraordinary rebound that we experienced between the end of March and mid-April has largely flattened so far this month. The markets have been more in a seesaw mode during the months of May, with an alternance of good periods offset by sharp reversals. There is still large dispersion by region or sector, and in the US only, for example, US large cap technology stocks performed relatively well. It's plus 1.5% this month, despite a strong outperformance already this year. While on the other side, US small caps were largely negative, losing 7.5% over the same period. If we look at the bond market on the other side, it has been relatively range-bounded as well, with both US Treasury and UK gilts overall flat so far this month. Only short-term bonds, which actually have benefited lately from central bank interventions with their willingness to be active buyers of government bonds, have performed relatively well in May.
Thank you, Pacome. Can you tell me, are we getting any more clarity on the economic news and the impact of the coronavirus?
Well, we are continuing to experience some mixed macroeconomic data. We have on one side some that are showing somehow alarming results, like the unemployment rate in the US, GDP forecast, or overall corporate activity. The level of weekly initial jobless claim in the US remains superior to 2 million people, and is often a barometer of the economic activity and unfortunately depicting a bleak picture. On the other side, we see some improvement, especially in Asia, with countries getting close to their pre-crisis production level. In China, for example, oil consumption is now back to almost the pre-COVID level, highlighting the quick reopening of the economy and a very good sign for investors. Well, it's worth noticing as well, and we discussed it already in the past, that the usual tools used and monitored by the economists aren't particularly well suited to a world with such an unusual shock offset by unprecedented level of state subsidiaries. And despite the fact that some of those numbers can be worse than what we saw in 2008, the state intervention, which was rapid and massive, might allow for a rapid or at least partial recovery, and this is what the market is currently pricing. On our side, we have increased our exposure to risky assets, and in particular equity, while we are still cautious with assets which we believe can be durably impacted by the crisis, like small cap stocks, junk-rated bonds, or emerging market debt. For the latter, the oil shock might actually impact some countries to pay back their debt in foreign currencies.
Thank you, Pacome. Okay, Brexit seems to be back in the news. Are there any developments that you would like to highlight?
Well, with all the recent events, the Brexit negotiations, which were somehow in the shadow over the last few weeks, have become center stage once again. I mean, the June deadline that the UK has defined for a broad outline of an agreement is just slightly more than a month away and really fast approaching. And the pound, which is having a fairly deceptive month of May, is losing mid-month around 3% versus both the euro and the US dollar, which is reflecting this increased level of uncertainty. While the recent information as well that has filtered are somehow unsurprising, and both sides seem to remain on their original negotiation strategy and tactic. The UK is expecting Europe to be more flexible with some of the EU rules, whereas European seems to be happy to just delay the negotiations, but they aren't proposing any new form of compromise. So as often, I mean, we believe if there is a compromise, it is likely to be at the last minute. And in the meantime, the next few weeks are likely to be eventful on that front, with the potential for heightened volatility in both UK assets and equity and the GBP.
Thank you, Pacom, and thank you to you for tuning in. We hope that you found this a useful update. If you have questions for us, we are still doing our Ask Our CIO webcasts. We're now doing these every 2 weeks rather than weekly. The next one is on Wednesday, the 27th of May, with our CIO, James McManus. We'll also be having an investor update coming soon, so look out for that. Thanks once again for tuning in.